Good morning, everyone. I'm Chris Vartzis, partner at Stephenson Harwood and head of the Greece Maritime Finance. It's a pleasure to welcome you all to our session today, which is entitled Now in Quarter 4, Will 2025 End with a Bang or a Whisper? That was a very interesting topic when it was offered to me to moderate today. As already mentioned, this has been a year of volatility, shifting trade routes, and new geopolitical realities. We are joined today by 4 representatives of both listed and privately held shipping groups, ready to share their perspectives on how these developments are shaping strategy, capital, and opportunity. Before we begin with our discussion today, I shall invite each one of our panelists to briefly introduce themselves and their organizations. George?
Thank you, Chris. I'm George Souravlas. I'm the CEO of Loadline Marine, a company that was established in Athens 16 years ago. We have a fleet of between 17 and 20 bulk carriers in the handy-size, Supra, and Ultra range. We try to do our job in the most efficient and environmentally sustainable manner. We try to foster relationships with charterers and long-term partners over the years. We have a very strong team with motivated and well-trained personnel. We're very proud of them.
Thank you very much.
Hello, good morning. I hope the audience will enjoy our conversation today. It's a bit early, but I think that we'll give them a wake up. So, my name is Costas Delaportas. I'm the CEO of DryDel Shipping. It's a private-owned company. We are based in 5 places in the world. Our headquarters is in Greece, in Singapore, Dubai, Brazil, São Paulo, and we just opened in Houston. We have different models from the Greek typical ship owners. We are ship operators and ship owners. Our current fleet, we are having 12 ships from handy up to Kamsarmax, or we have one of the youngest fleet in the Greek market. Our average age is 4 years old, and we are expecting 12 new buildings to come. So I think that we have very interesting conversation.
Thank you very much, Costa. Jerry?
Good morning, everyone, and thank you for having us today. I'm Jerry Kalogiratos. I wear 2 hats. I'm the CEO of Capital Clean Energy Carriers, as well as of the Capital Maritime Group. The wider group owns and operates 160 ships across different segments, so product and crude tankers, containers, dry bulk, LPG, LNG, as well as offshore.
Last but not least, Alex?
Thanks, Chris. Just picking up on what Mia said, I'd like to also acknowledge Jim Lawrence and how sad his passing was, and feel he's very much in spirit here and his indelible contribution to marine money and the industry. I'm Chief Operating Officer of Dorian LPG. We're a leading, very large gas carrier operator owner. We listed in 2014. We have a joint venture with Mitsui OSK called the Helios LPG Pool. It's based between Denmark and Singapore. And we have our technical management here in Athens.
Thank you very much, all of you. So let's start with geopolitics. From sanctions and Red Sea disruptions to the newly announced reciprocal US and Chinese port levies, geopolitics is now shaping the operating environment itself. How do you see these developments likely influencing trade routes, cargo flows, and risk planning in the months ahead? And what structural adjustments might owners consider to protect continuity and opportunity in such an evolving landscape? I would like to invite Jerry to share his views first.
Thank you, Chris. I think geopolitics has always played a major role when it comes to shipping. What has changed over the last few years, if you want, is the density, the frequency of major geopolitical events and how they affect trade flows and, of course, our business. If we were to break it down, I mean, first and foremost, we continue to have the Russia-Ukraine conflict. It does affect certain trades, predominantly dry bulk trades when it comes just as to what extent the war disrupts trade flows. But of course, the important bit is sanctions and the oil price cap, which has affected and continues to affect crude oil and oil product exports out of Russia and their direction. Nowadays, India and China are much more important markets than Europe used to be before the war. And this, of course, as we all know, has been a major boom for the tanker industry. That brings me to the second very important point. I mean, since 2019, and when the US used extensively sanctions as a tool in foreign policy and imposed sanctions on the COSCO fleet, we have seen sanctions being used very extensively, not just by the US, which used to be the case, but nowadays the EU, the UK yesterday imposed unilaterally sanctions on certain Russian trades and vessels associated with that trade. But also we have seen recently China using the same tool. Today, I think the best example is the tanker fleet. About 15% or 700 ships in the tanker fleet are sanctioned. And this has been a major disruption in the business when it comes to supply of vessels. The third very important point is, of course, the Red Sea. Today, only a quarter of the trade flow of ships that were passing through the Suez Canal back in 2023 use the canal. That has been a major disruption. That's one to monitor. We have seen some statements from the Houthis that they might pause to see how the peace agreement goes ahead. I think it remains to be seen, firstly, whether how well the peace agreement will be implemented. Secondly, as to whether the only motivation behind the Houthis attacks has been the situation, the war in Gaza. But I don't expect this to unwrap anytime soon, but it will affect especially the container trade, potentially the car carriers trade, maybe also dry bulk to a lesser extent, and oil products. Of course, the other one that we all have been discussing lately is USTR and Chinese port fees. That's a major disruption, and we have seen, as for example, how it has affected the VLGC market. Alex knows much more about that, but you can see how it affects markets. And finally, I think trade tariffs, as Apostolos outlined before, we are at a high point when it comes to trade tariffs. We haven't seen the full impact of what that means in terms of trade flows yet. These are just being introduced. I think we will see a change in trade flows that could potentially change how certain trades, especially containers, but also other trades, will develop. One last point. All these, of course, tend to be good for shipping, disruption, inefficiencies, and we can see that in the market. However, one has to take into account also that the way that USTR has been structured at this point, or how the Chinese port fees have been structured, they do penalize also capital coming into the shipping business out of China, for example, from lease financing or from private equity or public shareholders when it comes to the Chinese port fees. If that capital is being penalized, this means that it will be more difficult for ship owners to raise capital, and that will probably translate into some sort of inflation down the line together with trade tariffs. So somebody has to pay for that in the end. Is it going to be the ship owners, the end consumer? But what I'm trying to say is that in the short term, it all looks good, but all these disruptions, at some point, somebody will have to pay for.
Thank you very much, Jerry, for the extensive analysis. Costas, do you want to add anything?
I think Jerry's comment was very good and to the point, but I will talk on the dry sector. Actually, with the disruption of the Red Sea, because I'm a ship owner of dry company, and the disruption of the Red Sea and all the tariffs, the USDR, it's for the dry sector, it's a game changer. Now, with the last week, with the such short notice that the Chinese implemented the extra port tariffs, it creates disruption in the market. I learned some stories from my colleagues that they didn't know what to do. Some people, they have stuck in the China port and they have to pay more than 1.5 million on a Ultramax vessel because the implementing was only a few days notice. And some other owners avoided to go to China, and they are ready to discharge the cargo to a different place in order to avoid entering in this port the U.S. link owners. So this will create transshipment, and then transshipment always creates shortage of tonnage. So I think on the short term, we'll have a very strong market. However, on the medium, on the long term, I think that we have to be cautiously about the market. We have to have everybody wait and see approach, and we cannot predict how the market will react. I think it's premature to make any comments of the new Chinese models which are coming, the Chinese port dues. We have to say it's something which we are on the uncharted waters. We haven't seen that coming for the last 20 years. I'm in the business with so many port tariffs, so many sanctions, so many issues, but we'll still be alive.
Yeah, that's a fair comment, and let's see how this will evolve in the forthcoming months. Let's move to the markets now. Freight markets have been unpredictable in 2025, George, with shifting cargo demand, rerouted trades, and fluctuating trading conditions. How are owners adjusting fleet deployment, chartering exposure, and commercial strategies in order to stay resilient through constant market changes?
The freight markets. The freight.
Try.
Is it on now? Okay.
Yeah.
The freight markets were indeed unpredictable in 2025. It has been very difficult to predict the second half of the year. The first half was totally underwhelming. It was disappointing. We have seen lack of grain and coal cargoes. But in the second half, we have seen the weakness of the dollar has helped the market rebound significantly in the dry bulk sector. We have seen also that the trade finance has helped the markets to come to levels that were not originally expected, originally envisaged. The second half of the year have now the various tariffs, which have created disruptions in the trade, which have created possibly longer ton miles. We have seen more trade between South Coast, East Coast South America and China, for example, with soybeans, which has in some cases doubled the ton miles to China. Now, everything is happening now that all these additional tariffs from China and the US, the expected ones from the US, are coming into place. We are trying to keep at the best possible scenario using short-term fixtures, not long-term. We don't want to lock in our fleet into a long exposure. At the moment, we're trading on short-term fixtures. And the most important thing for us is to try to keep our break-even line at the lowest possible point where we feel that we can manage the vessels in an efficient way.
Thank you very much, George. Alex, in the LPG space, volatility takes a different shape, tied closely to energy demand and regional flows. Would you be so kind to give your perspective in respect of market volatility?
Yeah, I think in LPG, we've seen much less directional growth this year. So historically, we've seen a lot of growth, US to China. And for example, this year, we've seen over 30 cargoes from the US go to India, which is almost a 400% increase. And historically, that would have been supplied via the Middle East. We also saw a volatile first quarter, almost a little bit depressed freight rates, and the freight rates recovered to around an average of 45,000 a day this year, compared to 50,000 last year and 54,000 the year before. As Jerry mentioned, of course, we have the recent imposition the port tariffs in China, which is a moving target, may indeed lead to some short-term uptick, but ultimately will be passed on as part of the consumer cost potentially. But I think, yeah, adaptability is the name of the game, and we've seen that. And even in a volatile shipping space with geopolitics being key drivers historically, this year has been extremely adventurous.
Thank you very much, Alex. Let's turn now to the financial side, money. I know that there is a special banks alternative financiers panel, but I would like to get your input in respect of access to capital, the ship owner's perspective, noting that banks and leasing houses and alternative financiers have been showing varying levels of appetite and pricing. Costa, with credit conditions tightening and lenders showing different levels of appetite and pricing across the market, how is access to capital evolving for ship owners today? I would like to get your perspective both for banks, leasing arrangements, because I know that you're quite active in leasing arrangements in Asia, and also alternative financiers.
Okay, it's a very interesting question. Here is so many financing people here on the marine money. It's most of the coming from the finance. Actually, I believe the alternative finance will dominate for the coming years. What I mean for the alternative finance, I mean the sales and leaseback and JOLCO structures. With these two financing methods, we are getting higher rate, better margins. We are getting a higher LTV on the loans, and there are no governance on this. The only problem with this alternative finance on this JOLCO and the sales and leaseback that you have 2 times the call option to exit from the loan, or sometimes on the sales and leaseback you can exit from the 3rd or the 4th year. However, when you have the traditional back loans, you get higher levels, higher margins on this, but you can exit when you want to sell. You can exit from the first day. This is the big difference between the alternative finance. Many Greek owners now, they are moving on this alternative finance for the reason that, but for me it's very important is the profile of the ship owner, what he wants to do. Either go for the better pricing or go in order to exit when the asset price goes up. He can have the option to sell the vessel immediately. Now for the Chinese lease, actually DryDel, my company, we have done it only in Japanese, but I'm listening some stories from the other people. Now they're trying to refinance the Chinese lease. They go to Japanese or to European financial institutes, or sometimes
referring as a result of the
China, for the
tariffs between Washington and Beijing.
Yes, I'm referring about for the USDR, because if you have a lease on the Chinese, the registered owner is Chinese. So when you enter in the US, you should pay the extra port tariffs. For me, and the other options which are doing, first of all, they are doing the refinance, and the second point, that some Chinese financing institutes, they have turned the loans on a banking loan. So, and the actual owner is the Greek owner, is not a Chinese. So they are making some ways to get out of the Chinese leasing.
George, any input on that?
Stick on traditional lending by Greek and foreign banks at the leverage rate of about 50 to 55%. The margins are getting lower, which is making the investments looking more acceptable. And we're also seeing that the SOFR has a tendency to go down to perhaps even 3% by the end of 2026. This is what we hear. Let's see. Alternative finance offers some advantages. There are higher LTVs. The pricing could be better, could be worse. Let's see how you negotiate that. Chinese leasing at the moment is an issue because you're a registered Chinese owner. You arrive at the United States, then you have to face the additional tariffs there. I see that now they're trying to find ways around it. It's probably good business for the lawyers.
Absolutely. We're looking forward to that. Thank you very much, George. Mergers and acquisitions, Jerry, remain a recurring topic. But the question really is whether we are witnessing genuine structural consolidation in shipping or mainly tactical portfolio moves. How do scale, leverage, and governance influence competitiveness and strategic decision-making today, in your view? Yes.
So I checked, and now you will hopefully forgive ChatGPT if it got it wrong. But I checked how many public companies there were out in 2010 and how many there are today, and it came up with about 45 public companies back then, about 30, 35, depends a bit how you count Jones Act public companies, and there is definitely fewer companies, but I think that what is even more important is that we have the number would have been even a lower number if it wasn't for the spin-off of some companies that have appeared over the last few years, which are really very small companies, but the market cap of the larger companies has grown considerably. If you also look at then what's happening in the private sector, I think it's even more clear. Let's focus in Greece. In Greece, 15 years ago, you had about 830 companies. Today, you have less than 590. That's a reduction of 30%. Importantly, also, top 10 ship owners, they used to control 15 years ago about 20% of the deadweight tonnage of the Greek ship owner community. Today, it's more than 40%. So I think there is a clear trend towards consolidation. Setting aside governance and whatnot when it comes to public companies, I think the reasons have to do mostly with, of course, synergies, regulation, access to information, access to people, including onshore and offshore, and the ability to navigate this very complex international environment. So if you ask me, and of course, access to capital, that probably should have been number one. You talk to a lot of the top tier financiers, commercial banks and whatnot. They gravitate towards the bigger names with the track record, the diversified fleet, and so on and whatnot. This means lower cost of capital, and this means, of course, the ability to probably do more over time. So irrespective of governance issues or social issues or whatnot and what we discuss in public markets, I think this trend will continue. It will be slow. It's not something that happens overnight. Yes, of course, headlines are caught by the big mergers, but in the end, there will be that trickle towards more consolidation. However, the business is still commoditized, and I think that's the great beauty of this business, that it still leaves room for new companies to emerge and grow. So, and which is really the Greek miracle, right? The Greek shipping miracle. So yes, I think consolidation is happening. We will see more of it, and there are very clear reasons why this is happening, but it doesn't mean that the door is shut.
Thank you very much, Jerry. Alex, do you have to add anything?
Yeah, I mean, if you look back 10 years, I think, and look at the investment banks, there was a period where, shipping was, for the broad investment banks, very in fashion, and quite a few. You probably could look at how many analysts there were then and how many analysts there are now. So when you have a public company, you have to have certain coverage. You're going to conferences like this. So I think there's been a maturity within the industry, which has resulted in perhaps fewer companies, but more mature kind of, okay, for which sector you have 2 or 3 very good options. If you look at the customer and what they want, I think it's important from a chartering perspective, whatever company you are, to have a sort of a leadership position, top 3 position. And I mean, scale, I think you can do either through consolidation or through alliances and partnerships, as we have done with Mitsui OSK, who have 600 ships. So there are other options there, but and then more specifically, some of the recent deals, if you've seen from, for example, Golden Ocean or some of the subsidiaries there have been more tactical versus pure consolidation.
Thank you very much, Alex. And finally, technology, before we continue with the so-called quick-fire questions that I propose to set today. from data analytics, fuel optimization to ESG reporting and AI-driven operations. Alex, how are these tools changing decision-making and competitive positioning across the global fleet, in your view?
That's such a loaded and good question. So, I mean, we have now, of course, data-driven analytics, predictive modeling, can use machine learning to try and pick up on trend analysis before it happens. I think it's important to point out that even the cheapest AI server will still cost 300,000 euros and 120,000 euros for cloud analysis. But it's the biggest game changer, I think, right now in our industry. And from a company perspective at Dorian, we just try to fit it into our architecture because sometimes it's easy to get bamboozled by, oh, you can do this, this, and that, but what is the actual usability for you day to day within your fleet? So we're quite selective. And I've also seen some consolidation in the technology companies there and their offerings, but you know, it's the future for sure, automation and technology.
Thank you very much, Alex. So we have covered all the topics that I would like to cover today. So I propose, oh, George, you want to add something to the? Yes, please go ahead. Yes, we're running a little bit late, but short of time. But you know, if you want a couple of minutes, max.
Okay. Today, the ship owners are faced with the decarbonization issue. We have, a very clean industry in our hands. We transport goods in a very, very efficient manner. Having said that, we have to do our decarbonization part. The path is not clear. We have now decisions being taken at IMO level. Let's see how this is going to transpire. But at the same time, the new alternative fuels will have to be decided upon. My suggestion to the audience is, whatever decisions you take, you have to take into consideration the full cycle analysis and the availability of these new alternative fuels. Do a very careful study and make sure that you choose the right one in the years to come. This is a very long-term investment, and one alternative that may appear to be attractive today may not be attractive tomorrow. The burden is clearly on the ship owners that take the decisions to build new fleets with new technologies, or equip the existing fleets with energy-saving devices, paints, and whatever they can do, sails, or whatever. On the other hand, I would like to stress here that one important player has not offered any support to this game so far, and this is the ports. In our view, port optimization should be done in such a way that ships won't have to wait to discharge or load their cargoes and arrive just in time. The current port situation is that the vessels arrive at the ports and the ports only see the vessels that have actually arrived. This, in my view, is wrong. There is a lot of wastage and emissions of fuel and emissions that are being emitted to the air, and I think that this will change. The technologies that we have in hand today with communications and AI could help improve the streamlining of port operations.
Thank you very much, George. So let's wrap up with three quick-fire questions. I would like to have a short answer from each one of you, not big statements, very short answers. The first one refers to challenges and opportunities. Every cycle has its challenges and openings. Let's capture both. What's your biggest challenge right now and the biggest opportunity ahead? Costa?
The biggest challenge for me now is sorry, my microphone is working. The biggest challenge for me now is the tomorrow meeting for the net zero transition. So this is everybody here. We are waiting tomorrow for this important meeting to see what will be the final vote. The second challenge for me is a transition on the alternative fuel, which fuel will prevail. But for me, as I'm always say, I found it a bit ironic to still talking about net zero emissions, alternative fuels, and to keep operating 25 years old. I think it's a time to phase out this type of ships and move forward. One also opportunity for me on the dry sector, which I'm focusing on the dry sector, is that the dry sector, we have the historical low levels on the new buildings. So we are having below 10% compared to any other sector in shipping, which they have from 20 up to 50%. So it's an excellent time to invest on the dry shipping. Also, I will say something that we are not far to see the new technology of vessels which are coming above 2029, the Ultramax and Kamsarmax, we are not far to see below consumption below 10 metric tons. This is a new ships are coming with a very small engine and they will consume on the eco speed below 10 metric tons. I think this is the greener vessel to move forward.
That's the opportunity. Jerry, from your side, the biggest challenge, the biggest opportunity?
Sure, you will hopefully forgive me for the pun, but I think the challenge is how to get face the challenges and make them opportunities, because the uncertainty will be there, be it decarbonization, be it geopolitical events, all that volatility that we talked about, and there is both risk and opportunity there. So taking those challenges and finding the right opportunity, for example, betting on a fuel, betting on a ship design or a certain trade, that's where potentially the opportunity is, and of course the challenge.
Alex?
I agree with everything. I think also soft skills, human element, getting the right people in our industry for the future, big picture is a good one. And then opportunities, I would go back to the technology side maybe and how you can leverage that.
Jerry? Sorry, George? Briefly, please.
Very brief. We are at the crossroads of a Cold War between China and United States. New tariffs that may change from time to time without notice, as we have seen recently. We have the challenges coming from the IMO's meeting. I think it's going to be here tomorrow, and how the industry is going to be shaped. There is a lot of pressure from European and United States on this level. There are many things to consider. It is a challenge. It is a double-edged sword, and with this challenges, we think that bring the best out of us.
Thank you very much, George. Let's keep the momentum. Very short answers, please. If you could distill 2025 into one lesson, what stands out? One key takeaway from 2025 that will shape your 2026 strategy. Jerry?
The need for commercial and financial flexibility given the overall environment. I think it is very important to have both the firepower and the ability to persevere adverse events, but also take advantage of opportunities as they arise.
Alex, please.
The ability to sort of turn on a dime and respond to regulatory uncertainty.
George?
To readily adapt to the changes, to have a low baseline cost, and to be able to have strong relationships with your business counterparts.
Very good. Costa?
The lesson that we learned from 2025 is to learn with a lot of volatility in the market, to live with this tariff war, and this makes us feel very, very strong. We're very confident, and we're ending up after surviving all the new regulations, all the issues, with a very strong point. But for 2026, I will focus on the strong balance sheet, and I will continue renew my fleet by ordering more new buildings, as the only way to go forward is efficient.
Thank you very much. And finally, looking ahead, If you were to give one line of advice to an investor or financier looking at the global shipping industry, what would that be? Let's start with George this time around.
Geopolitics is the most important. The geopolitics is the number one issue. I mean, it has always been for shipping, and it is right now. For more than a decade, the geopolitics have played a very, very important role. Be conservative, good relationship with your business counterparts, and everything is going to go ahead fine.
Alex?
In spite of all the volatility, I think it's been a very good few years for most sectors, potentially with a few exemptions. So just to, remember that that's a positive, but may not always continue that way.
Jerry?
I think it's the same lesson applies. Again, commercial flexibility, strength of balance sheet, diversification also very important because not everything moves in the same way. And I think that has played out very well for us.
Costa, your
I
view?
think that the financing people, they should support the Greek ship owners, not only due to the size and the values of the assets we are having, but they are investing to the Greek people, which they are doing a very good job, and they can navigate successfully in all shipping cycles. This is the most important thing, the people to invest.
Many thanks to all of you. Many thanks to our audience. I do apologize for running a bit late. It seems that adaptability remains the defining strength in our industry. And if there is time for any questions, no time. Thank you very much for your time, everybody. And thank you, my distinguished panels. Ευχαριστώ πάρα πολύ.
Thanks.
Thanks.